The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody, and welcome to today's StockWaves webinar. Can everybody see my screen and hear me? All right, thank you, Richard. All right, let's go ahead and get started. Today, we're going to cover some of the travel sector, focusing on a few of the cruise lines and then maybe a few other travel companies that we can include. But the chart for Carnival, CCL, really looks like it has good potential for trying to bottom here in the intermediate degree B wave in a larger diagonal. Going back further, we're not really projecting forward this part of a move, but this is likely an A wave and maybe a B wave, and then this ending diagonal can be a stretched out C wave relative to the size. But we do have what could maybe count as either 5 waves up or as 3 waves up. I think it's probably better to count an A and a B and then the C wave up for that A. But we have an A wave that got to the 786 extension, which is pretty common within a diagonal. A B wave that is currently retracing close to the 618. Maybe it drops a little bit deeper in this fifth, and we'll zoom in on that in a minute. Setting up for a C wave that would be targeting the 100% extension, takes it just past the 100% extension of the third, and the 1236 takes it just past the 123.6% extension for that primary third in the diagonal. Then because it's a diagonal, we'd be looking for a deeper fourth wave. Doesn't necessarily have to overlap with the top of wave 1, but a diagonal is the only pattern where that is allowed. And then further out into the future, another ABC move up for the fifth. Zooming in, we had the potential to count a little bit more of a compressed C wave here inside the B, not to the full extension that we would normally see in terms of a measured move for the C wave, but it did hit a 618 retrace and it turned up a little bit higher than typical for a fourth. So even though it was clearly an ABC move up, we can have an ABC move as the wave 1 in a leading diagonal. So there certainly is still potential that this is the 1 and just a very sharp drop on the coronavirus news of the quarantine ship. I think was the catalyst for more of this drop, although we were already fading from that before we got the spike down. But this could still be a 1-2 in a leading diagonal for this wave 1 of C, but it seems much more likely that this was just a fourth and that we're getting a fifth wave down to at least a nominal new low under this 3970 level, and probably trying to stretch a little bit closer towards about 3750, which would be closer to a measured move and at about the 76.4% retrace of the parentheses A wave. So once that bottoms, we'll be looking for a new start to the wave 1 of the parentheses C wave. And that can restart. That does not have to be a leading diagonal at that point. From a new low here, we can just look for a micro 5 up and 3 back as the wave 1 and wave 2, and then the rest of the 3, 4, 5 to give us a very high probability that a bottom is in place for this longer intermediate term move up. Moving on, let's take a look at one of the other cruise lines as a competitor, RCL. RCL looks a little bit more like most other equity counts, where it has a pretty big reversal off of the early 2009 lows that counts as primary degree move up. I have it labeled here as a wave 1, but you can see that it has not extended as the primary wave 3s have done in most other equities. It's really hung back, and it can still be consolidating in the intermediate degree fourth wave of that primary wave 3. So maybe it needs to come down in more of a C wave towards the 87, 70 region, or into the 70s, and then can swing up towards the 290 region, which would be a pretty substantial move. But the risk here is that this is filling out a stretched out C wave that's, I mean, it looks like it's stretched out because of the way the subwaves divide, but coming right to a 100% extension as a larger C wave. So instead of a 1, 2, and inside of a third already, might be completing, particularly if it extends up towards the 172.70 level, that it could be completing this larger C wave and then be much more long-term bearish. So off of December 2018 low, we don't have much of a clear count, although it can certainly count as this WXY, or maybe get one more push up as the fifth wave of a C if it holds right here at the 113 level, but certainly only 3 waves up off of that low that looks more in line with this being part of a correction here than the bullish start to more extension. Next, we'll look at NCLH, which I think is this Norwegian cruise lines. I think that's Norwegian. Norwegian's count starts back here in 2013. I don't have any data before that. And this really looks like an ABC move up. So I was initially counting it as an A wave, but after looking at the way that that Carnival seems to count, where it looks like an A and a B wave trying to bottom inside the third of a larger diagonal, I think this blue count can be applied to the NCLH chart in a very similar pattern, and it even looks like it might be one step ahead of Carnival, with a possible wave 1 and wave 2 in progress in the start of that parentheses C wave. If not the parentheses C wave, then it can certainly be a 1-2 start in a third of a bigger C wave up, but the first move here was clearly only ABC off of that 2013 low. In the shorter term, we have pretty clear 3-wave move up off of this August low. So this can be an A and a B wave and coming down in the C wave of a flat. Support in NCLH in this green 1-2, whether it's part of the blue C wave or the white parentheses 3, is the 46 to 42.70 region, ideally, on much below 42.70s, and it gets harder to count that as a more bullish setup. Checking in with Marriott. Marriott looks like it's topping in a third of either the primary degree that I have here in white inside this larger cycle wave 3, or possibly already topping in that cycle wave 3. It did hit a 138.2% extension as a double top, so that could count as 1, 2, 3, 4, and 5 completing for the larger cycle degree, or even still a B wave top inside of a primary degree fourth of the larger cycle 3. But definitely looking pretty toppy. There is maybe room, if it holds the recent low at 132.50, to try and get a little bit more extension, but certainly showing some more significant risk based on the current structure, especially because you can certainly count this as an A, B, and a C wave complete for this larger B, and could get a more impulsive move down as the C wave in an expanded flat. Thought we'd check in with BKNG, which I think runs a very similar risk to what we were just looking at in Marriott, where the structure off of the December 2018 low here can very clearly count as an A, B, and 5 waves up in a C wave that looks like it's starting to roll over. So this B wave that did not make a new high can certainly be in place. And this can be working on the first 5 waves down as the parentheses C wave that may easily stretch. The more it stretches towards the 1200 regions or even below, then the more likely that this might be all of the cycle wave 4 and not just the larger A wave inside an even bigger cycle wave 4. The next chart that I wanted to look at was TRIP. TRIP really has a very, very ugly chart. It looked like a potential ABC corrective move complete that could have been more bullish back here in 2017, but it could not get a clean move off the low. It had a possible leading diagonal, but it could not hold a clean corrective retrace and went on to break that support and invalidate this low. So if this is a larger A and B, then the C wave can be pretty far down here and may not take nearly that long to get there, but certainly does not have a bullish setup here compared to things like BKG, even though it looks bearish in the short term. In the intermediate term, once that larger C wave down completes, then it has an established uptrend that we can that should resume. But wanted to look at that for some contrast. EXPE is the next one. This also got very, very messy the last few years in here. After what could have counted as an expanded flat for the fourth, it couldn't gain any traction to get the fifth wave up in primary wave 3, but it did hit a 138.2% extension. So it is possible to count this as the parentheses 4, even though this is a very small consolidation here, and this is the parentheses 5 of the primary wave 3, and that this is already in the primary wave 4 consolidation that does have support down here in the lower 80 region and maybe a little bit below, but certainly no clear pattern to argue for a substantial bottom there. But that is something that if it does get a little bit deeper and then starts to look bullish off of a lower low, then we might be able to go ahead and move labels over something like this and look for that primary degree wave 5 up, which if it topped at the 1382, may only target this 176.4% extension at about 260. Two more I wanted to look at are Trivago and then TCOM. Trivago looks like it's filling out one of our Cowabunga IPO patterns. It got this initial small move up after it started trading on the exchange around $11. And then looks like it's filling out this larger ABC correction that should bounce a little bit more in a fourth wave. I say a little bit more, but that actually looks like it can go from the mid to high 2s all the way up into the 4 region as that fourth, but then would probably be heading down and have some nice confluence with our lower trend line and the 1382 extension of the C wave at 161. But that would certainly satisfy the larger Cowabunga IPO pattern, and we could certainly look for a bullish move to emerge off of that fifth wave of the C wave low. And then lastly, wanted to take a look at TCOM. TCOM looks like it can be running similar to that larger degree diagonal that we were looking at in the two cruise lines, but it looks like it needs more of the C wave of a fourth. This actually might want to hold a little bit higher so that the trend lines don't expand as much. But this can easily just be the wave 1 and the wave 2 in an ending diagonal for this C wave to the downside. Possible, though, that it needs a wider flat for the wave 2 first, but I would certainly consider this potential. Actually, does this look like it might be 1, 2, 3, 4, and 5 of a leading diagonal? Garrett?
Yeah, I probably would go with the ED you're originally going to. I don't know if I actually have a count on that one.
Only reason why I started to get hesitant there is it looked like maybe it was trying to make a lower low as a fifth, and then this looks like it could subdivide as 3 waves. But maybe you could call a little 1, 2, 3, 4, 5 there for the C wave. And so we know that in a diagonal, all of our subwaves are corrective ABC moves. So not just in the wave 2 and the wave 4, but also inside the waves 1, 3, and 5. And the other difference between an impulse and a diagonal is the fourth wave can get a higher bounce or a deeper correction compared to a regular impulse. But this looks like it could be starting the A wave of that third in the diagonal. If it got much higher than 35, 36, then I'd say maybe it's filling out a wider flat for this wave 2, and then you'd have an easier time of holding parallel or contracting trend lines for that diagonal. But this is certainly sufficient for all of the wave 2 there. All right, with that, let's go ahead and jump into the requests.